As a trader, every once in a while you learn something totally new that changes your entire perspective of the financial markets and trading. This book was one such for me. Imagine that you got 30 minutes with few of the most famous and the most successful traders in the world. What would you ask them? What would you try to learn from them? That is what this book is all about. Market Wizards by Jack D. Schwager. A series of interviews with the top traders in America at that time, trying to get more insights into what made them successful traders. And as the author says, I am not expecting all the readers of this book to transform into super traders, because that is not how the world works. But there will be a small set of individuals who are open-minded and skillful traders who might be able to improve their performances, and there might be a handful of those who actually become super traders after all. So hello viewers, this is Ajay Ajith with a different kind of video where I review this very famous book. So this is Market Feed. Let's get started. Jack D. Schwager was a trader who was very successful at that time, but he had a problem. Every time he would start trading with an amount of $10,000 into his account, he would quickly transform that into a $100,000 account, that is 10x, but from there he could not grow. So he was trying to learn what was stopping him from achieving more and more success. So that's when he decided to interview a lot of traders, come up with common strategies or common characteristics from all these traders, which made them transform their very small accounts into super successful huge accounts of their own. He was trying to find this one difference between normal successful traders and super successful traders. And he asked the question himself, is it their education? No. Is it their impeccable skills with reading charts? No. Is it their insider knowledge or their inner core trading abilities which made them super successful traders? No. That is not at all what he learned at the end of this book. He interviewed 17 different traders to find the answers to his questions. These are traders who turned $400 accounts into multiple hundreds of millions of dollars. Another trader who started with $30,000 wiped out his account multiple times, that eventually turned it into a capital of $80 million. And mind you, this book was written in the late 1980s. Yes, that's how old this book is, but the lessons you learn here are absolutely invaluable. So do stick with me throughout the entirety of the video. So first, let me discuss the points which I feel you should definitely learn as an intermediate, beginner or even an expert trader. These are the points that I took home at my heart so that I can improve my trading skills as well. So the first point that I came into was finding your perfect strategy. I know you might have heard this 100 times, but then when you go into each of these interviews, you can see people who try to copy this super traders or the super traders trying to copy other traders themselves. But this most usually does not work. The author and most interviewed traders always keep on repeating the fact that, hey, you should find the exact perfect trading system that suits your trading style. And another overarching trend that I saw throughout the video was the clear definition of risk by these traders. I'm talking about trading with just 1 to 2% risk per trade. I know most of you trading would definitely put a lot of capital into your trade. Think about how much money you're going to make instead of thinking how much money you could potentially lose. And this is what most traders in the book are saying change them from normal traders or money losing traders into super successful traders. The book says that even really good traders are often trading with 5 to 10x more risk than they should take. That means if you're trading with a risk of 10% for this trade, never do it. Reduce your position sizing. That means reduce your quantities if you're trading in an asset, and then try to bring in or try to reduce your risk to the overall account. And the third point which I took to heart was this question in the book. What do you do when you see a small profit in your trading account? What do you do when you see a large loss in your trading account on a certain day? Most people, when they see a small profit, they're afraid that this profit might go away and they end up booking their profits. They do not let their winners run. And those traders, when they see a large loss on screen, they go into a wishful thinking mode. They're like, hey, this trade will come back, surely. And from that large loss position, they keep on holding it till situations get worse. So think about it. Most people usually cut their profits very short and let their losses run. But it is very clear once you think about it that you should let your profits run and cut your losses short. And the fourth point is that overnight successes are not as common as you think. The book covers a lot of traders who are trading during the crazy bull market time of the 1980s, but they say a lot of colleagues of theirs who were continuously making losses despite making huge profits. That means in one trade they'll make a huge profit, and in the next few trades they'll end up losing all those profits and end up losing their capital as well. So definitely it was not easy then, it is not easy now as well to become a very successful trader. So do not go into the market by thinking my first day in the market will be one of huge profits and I'll continue to make huge profits every single day. Do not think about it that way. It is just not how the world works. And the fifth theme that I saw throughout the book was their continuous desire to win. Even when they make a lot of money, it was not about making more and more money for all of these traders. And this is what I believe made them so successful. It was their burning desire to keep on becoming a better trader day by day, to keep on controlling their risks and to keep playing this game where they enjoyed the thrill of winning every single day. But do remember this one warning: never be blinded by your desire to win. If you're continuously making losses, there is one logic that I love throughout the book. Every single interviewed trader says that if they are making losses, what would you do normally? You would go and take trades for a larger quantity. But every single successful trader here believes and says that if you're making continuous losses, keep on reducing your position sizing. Keep on reducing your capital so that your risk continues to go down. Do not risk more and more of your capital. So now that we've discussed most of the general themes of the book, let's go into few traders one by one who I felt most inspired by. So the first trader that I loved from this book was Paul Tudor Jones, a very successful stock market participant who talks about risk control and risk control. He says that if the positions are going against him, he will not keep that positions. He will cut those positions. He says that if the positions are working for him, if the profits are running, he keeps those positions. And if the positions are working against him, or if it is not going as planned, he will exit that positions immediately. So he introduced a new concept to me as well, a concept of stop loss both on a certain level and on a certain time as well. So imagine you're long on Nifty and you're waiting Nifty to hit a certain level. You had certain views why Nifty was bullish, and then you would probably wait till the target or wait till the trades fall to a loss. But then Paul Tudor Jones taught me that you should also think about having a stop loss based on time as well. Say you have an outlook of 1 hour. If the market does not move favorably to you within the next 1 hour, you can think about exiting this trade. So definitely keep this in mind the next time you're trading. And he talks about having a universal stop loss control. That means a portfolio stop loss beyond which or below which you will not let your capital wash out in a single day or a week or a month. That means do not take more risks than you should. And he talks about you not having to become a hero. Don't have an ego. Don't try to fight the market thinking that your views are so correct that the market will move that way. Make sure you don't have an ego and you trade according to what the market talks to you. And the second trader I liked is Bruce Kovner, who said that do not get stuck in situations where you could potentially lose a lot of money in situations you do not understand. This is how he escaped the 1987 stock market crash called as Black Monday, the same way that Paul Tudor Jones also did. And Bruce Kovner taught me this concept that not all profitable trades are good trades and not all loss-making trades are bad trades. So imagine you're going long on a trade, again the same example, and you've kept a stop loss, right? And the market fell and it hit your stop loss, you made a loss, but then the market continued to fall further and further. So you made a loss, but was that a good trade? I would say yes. So this concept will definitely teach you not to become overconfident with your profitable trades as well. And Bruce Kovner has also said something that I personally relate with. Keep a stop loss at a point where you feel if the market reaches still there, your view of the index or the stock or the security is negated. Suppose you go long on Nifty at a level of 19,000 and you identified a very strong support of 18,700. which is supposed to be a very important technical support zone. So do keep your SL just below that point, so that if the market reaches till there, don't hold on to your ego. It means that your initial view was wrong, and now that the market has reached back 300 points down to this level, you should let go of that trade without having any sadness at all. So make sure you do that with correct position sizing. That means reduce your quantity as your stop loss increases, and you'll definitely end up making a lot of money if you're a good trader. And for traders who fight between technical analysis is the best, fundamental analysis is the best, there was one quote from Bruce Governor which I like the best. When the markets move without any specific reasons, those are the best moves that you should look to catch. And now let's get to the third and last trader that I love, Michael Marquez. So Michael had a phase in his early trading career where he was making recommendations, stock recommendations to a lot of people. And those recommendations were doing really well. They were really profitable, but Michael was always ending up in losses. So he thought about why this is happening. He understood that the market always offers huge promises, but it is your responsibility as a trader to make sure you stick with your trading style with conviction and you make profits out of that trade. Nobody else can help you with that. He also asked this interesting question to the author. Why do you want to take a lot of trades? Because in the average life of a trader, there are just very few number of trades, say 20% of trades, which make him the 80% of profits. So why not identify those small number of trades, cut down your number of trades and make a lot of profits? And never over trade to come out of your losses. He also advises for plotting your equity curve so that you can understand how fast you're making money and how fast you're losing it also, and you can identify if there is something wrong with the pattern and take necessary steps to correct it. Most traders do not even know what an equity curve is. So definitely, if you do not know about it, make sure you go learn about it and start implementing it from today itself. So yes, let's get to the next section with all the learnings from these three super traders. It is why read a book at all. This is a book that is nearly 40 years old, and you can learn about a lot of concepts including algo trading, moving averages, position sizing, stop loss hunting, the myths behind it, a lot of very crazy topics including even technical analysis who we take now for granted, which were discussed in depth in this book of nearly 40 years ago. I strongly believe that if you want to learn something in this day and age, you have a lot of sources, YouTube videos, articles online and whatnot. But if you want to become a master in your space, this will not alone help you. You will definitely to read books like The Market Wizards to make sure that you improve your trading knowledge and become a super trader yourself. So I urge you all to go pick up this book, read it and improve your trading psychology and your skills there as well. And make sure you follow the 5 rules of trading that one of the super traders here, Ed Seykota, has described. Cut your losses, ride your profits, keep your bets small, follow the rules and learn when to break the rules. So yes, this is Ajay Ajith signing off. See you all in another video. Bye bye.